So, should we buy or sell the Industrials ETF? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we have a theme that is called, industrials in the sectors, and there's a bunch of ETFs here. So we will look at the global infrastructure ETF. So we have 16% here from the 52-week low. We are basically at the highs. So there's been a pretty substantial move here in the industrials. This is the long-term picture for the IGF ETF. We do see that it moves in cycles. So you have smaller cycles. These seem to have some decent relevance. So it was also relevant during this rally back here. If we look at that, okay, let's zoom out a bit. It does suggest that the current rally is, it should be peaking. So we do expect a declining phase. And so these time cycles, they have been pretty good at calling price action. So that's interesting. Looking here at the chart, it is very clear that this is an ETF you want to buy low and sell high. It moves up big, but it also moves down very big. It can easily have a bear market during an overall bull market. So here, as an example, all of a sudden we go down approaching 18%, so that is pretty close to like the very definition of a bear market. Daily data points, huge move. So of course you could look at this chart and be like, okay, maybe we are going to have a full measured breakout. But then you have to look at the history of this ETF and look at whether breakouts work or not. If you look at this, here we had a breakout. In this sense, you did get, a 14-15-ish% rally, but then you did get, a substantial correction. But that breakout, you could argue that it worked. In this case here, as an example, you had a breakout above, these levels. Then you initially had a pullback a bit higher, and then you had a full correction. Then you had this breakout here above, these levels all the way back here. You did get, 6% breakout and then a complete crash. So let's measure how far we have now gone in terms of a breakout. Yeah, so we have a 3% breakout. But based on the history of this ETF, breakouts are not exactly extremely buyable. Okay. So let's look at these other indicators. So when we look at the MACD, we have extreme readings, very high. Looking at the RSI and the PPOs, which measure the distance between price and the various moving averages. So let's zoom out a bit here. So when we look at the distance between price and the blue 100-week moving average and the green 50-week moving average and the purple 20-week moving average. So the previous times all were high along with RSI. That was during this peak. Then we go back here and we see this major time cycle. It also peaked with these kinds of readings that we have now. Though RSI was higher back then we can look at this major rally, which peaked in mid-ish 2014, and then we did see a very substantial correction. In that case as well, RSI did go a bit higher, but we do have very similar readings on the PPOs that we have now. Looking at the daily data points, so we do have a bit of a cellular signal here on the MACD. Nothing really dramatic, but it is, a crossover. Accumulation distribution is still very strong, and RSI and the PPOs, they are very elevated, like we saw in the weeklies. So in terms of the line in the sand, we definitively have overbought RSI and PPOs, definitively. So that's like the key thing. We also have a time cycles. In this case, we do have bearish. So We were now towards the end of the rising part of the time cycle, so we do expect the bearish phase to begin. So overall, the technicals here, they are rather bearish, so I will give them a -6. So based on the history of this ETF, the future is more favorable to bearish technical trades than bullish. Let's look at the seasonality. So over here, the last 5 years and 7 years here in green and blue, we do see that the seasonality does have a tendency to strengthen towards late May. And then we do have a pullback that usually gives up the gains that we got during that period. In red here over the last 10 years, then we do see that there usually is some strength here again towards May, and then we do see some weakness. To the left here, we do see that over the last 5 years, this is seasonality for April is very strong, could not get better. 10 years, it closes higher 100% of the time than over the last 16 years. Then April for this ETF closes higher 93% of the time with an average 3% gain. But the big but is that May, which is the following month, is one of the weakest months for this ETF. So while the current month is bullish, the following month is more bearish. So I do think I will give this one to the bulls, give them a 3, but it is a problem that May is so mediocre. The average gain for April was 3%, and we already have received half of that so far in April. So that is something to take into account. Here I am comparing the iShares Global Infrastructure ETF with the S&P 500. Looking at year-to-date performance, 8% for IGF and minus almost 8% for the SPY, so definitively very different. Lower beta for IGF, price earnings is a bit higher than the S&P 500. Dividend is rather generous at 2.64%, so the dividend here is good. When we look at the holdings, so let's go a bit further down. So we do see that utilities is pretty big here for the IGF, and that is I'm a bit surprised that you have 40% utilities simultaneously as we have. I don't see any communication services here, because if you are going to, I do agree that utilities are definitively infrastructure, but you could also make a very strong case that communication services also is infrastructure. So, yeah, I mean, a lot of people will be happy to see a big portion of utilities because they are there's less volatility and more predictable earnings. So here's the S&P 500 to the right. Market cap breakdown. We do see that large caps they certainly dominate in the infrastructure space. Very tilted here towards North, well, basically America, and then 28% exposure to Europe. So in terms of the fundamentals, we do have a situation where it is richly valued, and given that the price earnings is higher than the S&P 500, it even is sort of higher when you take into account that utilities are such a big part of this ETF. The yield is good though, but I do think I will give this one to the bears, not in a huge way, but I do think I give the bears a -2. So here is the correlation between IGF and the S&P 500 long term, 52% positive, 70% with XLI, which is the industrials spider ETF, 79% with the utilities ETF, XLU, then -11% with the dollar index, short term. Then we only have 6% positive with S&P 500, 10% with XLI, 74% with the XLU, and 54% with the dollar index. So what happens to the XLU will have the biggest effect on the IGF XLU. So yeah, here we see a price action that is very similar. XLU has also seen a very sharp increase here. Very sharp, actually. Another thing here with the XLU is that it does have these, clean-ish time cycles. Rise, decline, rise, decline, rise, decline. Yeah, not super clean, but something approximately around here. But basically, we have already... The point here is that this ETF as well has a strong tendency to go up, but also to have very frequent pullbacks to moving averages or horizontal support levels. Basically, this is also an ETF where you buy low and you sell high. And after we have had, 1, 2, 3, well, let's actually count it like this. When you have had, 42 days of, a pretty strong rally, that is when you should tighten your stops. Yeah, looking here at the PPOs and RSIs, we have historically very high readings on the XLU. Also, the MACD here just really high. Looking at the daily data points, a very similar message. Let's look at how valuable sell signals on the MACD have been, because we currently have a sell signal. If you were to trade the MACD sell signal, you would get a sell signal here. If you went short, it would work out. If we go a bit back here it was very noisy, but you did get a correction here as well. Here as an example, here you get a MACD sell signal with blue crossing below red, and it would work out decently as a short signal. This is something you should also, always do when considering using an indicator. To trade a signal from an indicator is to basically look back in the history of the security, whether it works or not. When it came to MACD here, daily data point crossover signal, it certainly seems like MACD is pretty informative when it comes to the XLU. So here is the relationship between the IGF and the XLU. We do see that global infrastructure has been in a downtrend, meaning it's been underperforming. But there is a pattern here that it's been repeating a bit. So let me just draw that in. Let me get my handy drawing tool. Need to update that one soon to stop the complaints. Anyway, so here we do have a double bottom, and then we did see a rally. Here we got a double bottom, a similar-ish pattern, but we didn't get what we have already seen, a bit of a breakdown. You see that the most recent price action that we have, here, it is significantly weaker than what we saw back here. So yeah, it basically looks like this pair is going to resume the primary dance in which, infrastructure underperforms XLU. Let's look at the seasonality. What does that tell us? So over the last 10 years in red, we do see that it's a bit flattish, and then we see underperformance from the IGF. In blue here, over the last 7 years, we usually see a bit more strength and then underperformance. In green, over the last 5 years, IGF outperforms towards early May and then starts to underperform. So that is the relationship. Then let's look at the relationship between the XLU and the S&P 500. So yeah, so this is very interesting because it shows us how these behaved during previous bear markets. So let's actually measure here as an example. So here you had the dot-com bubble, and then you see here that the utilities, they outperformed the S&P 500 for 567 days, so 81% outperformance. But when the bear market started to end, in the S&P 500 and the Nasdaq, then we did see that the XLU underperformed. But then quite interestingly here, from the period here of late 2002 all the way up here actually towards early 2009, you saw that for a long period, 2,303 days, the utilities outperformed, they beat, the S&P 500. And that was a very long period, very long indeed. And that was, of course, during the global financial crisis. But yeah, after that, when the money printing went wild, central banks around the world went absolutely berserk, and we have seen for a very long period lower highs and lower lows in this pair. But I think the interesting thing to just consider with this pair is that we have seen in the two previous bear markets, official bear markets, that the utilities substantially outperformed the S&P 500. Let's look a bit here at the seasonality for this pair. We have already seen, some outperformance here from the XLU. So in red here, over the last 10 years, we do see that the XLU tends to underperform towards my birthday, actually, and then it starts to outperform here. That's interesting because I have a birthday on the 7th of June. We see a similar thing here in blue over the last 7 years and green over the last 5 years. So that's interesting. So on my birthday, you should consider maybe dipping your feet into some XLU. But the thing is, okay, so we are analyzing the IGF. We did see that when we compared the IGF with the XLU, it did have a protracted history of underperformance. And we also see that, the XLU is very much due a pullback. And there was a very strong correlation between IGF and XLU. So I do think I will also give this one to the bears. Not in like a big way, but there was some, bearish signs here. So a -3. So the average score is -2. So the data is more favorable of bearish trades than bullish. A very key part here of this bearish thesis is that we did see, when looking at RSI, we looked at PPOs, we looked at time cycles, we looked also at what previously happened during breakouts. There were some breakouts that led to more significant gains, but quite a few of them, we did see that we got a bit of some gains, but then a substantial pullback. So yeah, overall, it seems more favorable towards bearish than bullish trades. Whatever you do, of course, you want to use stops, be market neutral, and get VIP access.